This is your LMAX exchange technical update for Friday, March 3rd, 2017. Euro dollar. All of this dollar strength this week, and yet the euro isn't confirming the price action, with the market continuing to hold above 105 on a close basis and unable to establish back below last week's critical low at 104.94. Again, we've talked about the possibility that if the euro is unable to establish a close below 105, it could set up a right shoulder and an inverse head and shoulders formation that projects significant upside over the days and weeks ahead. Of course, for that to happen, we would need to see a break back above 106.80, but initially, if the market trades higher and does not close below 105, that picture is going to come back into play. If, on the other hand, the pressure does remain on the downside and the euro establishes a close below 105, this sets up an immediate acceleration back down towards the 14-year low from January at 103.41, which guards against that critical parity test further down. Sterling dollar. So cable is broken down after consolidating over several days, but the market remains pressure to the downside, and there is risk now with this latest breakdown exposing a retest of the recent 2017 low just under 120 at 1987, which guards against that critical October 2016 plus 30-year low at 118.41 further down. At this point, if we see any rallies, they should continue to be very well capped. Ultimately, it would take a break all the way back above 27.75, the December 2016 peak, to take the pressure off the downside. Dollar yen. So dollar yen has seen a nice push higher over the past several days, but ultimately, while the market holds below 115.62, a consolidation remains in play, and the market could just as easily stall out yet again in favor of the next downside extension back towards the recent range lows in the 1160 area, a break of which would see an acceleration to the downside that could take us back down well below 110. Euro Swiss. So Euro Swiss has been consolidating just off the 2016 base at 106.24. It seems, given the consolidation that we've seen, that the market will ultimately break lower. This is a bearish consolidation, accelerating below 106.24 and towards 105 further down. For this to be negated, we would need to see a break all the way back above 107.60. Aussie dollar. So after seeing a very impressive run in Aussie in 2017, the market has stalled out into some critical medium-term resistance up towards 78. The market's break back below and close below 76 confirms this outlook and suggests that we could see additional weakness over the coming days that takes us back down towards medium-term support just ahead of 70. Dollar CAD. So dollar CAD has done a formidable job of holding up above critical psychological barriers at 130 in recent days, and this latest push higher confirms a resumption of the broader uptrend, which could take us back towards a retest and break of the multi-day highs up around 136. Kiwi dollar. So Kiwi continues to accelerate to the downside after the market topped out in 2017 just ahead of 74. The market overall continues to show signs of the formation of a longer term top, and an acceleration back down towards medium term support in the 66 area should not be ruled out over the coming days. SPX 500. The S&P 500 has put in another record high this week, and although we've seen setbacks over the past few sessions, the market would really need to establish back below 2350 to suggest the onset of a legitimate correction. Until then, dips should be very well supported in favor of what could be the next major record high above 24 and towards the 2450 to 2500 area. Again, technical studies are extended, but to confirm the potential for reversal, we would need to see a break and close back below 2350. Gold. So despite setbacks in gold, this is a market that has been very well supported in 2017 on dips and over the past several months on dips. And so this latest dip is expected to once again be supported, ideally ahead of 1200 and around the 1216 area by previous support, in favor of the next major upside extension beyond the recent highs that came in around 1264 and towards 1300 further up. It would take a break back below 1180 to compromise the constructive outlook for gold.